What up, Ace? My bad. What up, Ace?
What's going on?
Nothing much, man. Nothing much. I just want to give you an update on the Turo stuff. So, one thing I had to do before I list the car is I had to, like with the Kia, it had 2 recalls on it. So I called them to find out what's up with that. So if anyone's listening that's thinking about getting into it, make sure you get the recalls fixed. So that way, if something were to happen, you can get your full, like, for example, whatever your car's value, if it's worth 12,000, 10,000, whatever it is, make sure you have that figured out. Because if you list it without having the recalls fixed and then you get into an accident or somebody gets into an accident, you won't get your money back. So,
Yeah.
little piece of advice. But yeah, no, the car just needed a little brake, like a brake light sensor, because the brake light, it's fine, but I guess they had faulty brake light sensors so that it'll stay on and it'll kill the battery. But besides that, I'm getting that fixed this week, and then I have my first rental already scheduled for Friday. I actually have some family members coming in. They're going to be renting the car out and stuff. So,
No, that's a good way to start it out.
yeah, I'm going to test it out. They're going to go to Orlando and stuff, because I'm here in Tampa. They're coming down for a baby shower, so they're going to have it for 7 days. I charged them about what I would make it basically if I was putting on the app after fees and stuff. So it's a good little test run to see how it works, make sure everything's running good. I've been driving it every day to make sure there's nothing wrong with it and stuff. But yeah, man, it's been fun. It's been fun so far.
Make sure you get a kill switch and a tracker on the vehicle.
Yeah, I was talking to Ashley about that the other day. Actually, I DM'd her because she was on live and she was talking about how her car got stolen.
Yep.
And I was trying to ask her, like, what happened. And so she was like, just make sure you get a kill switch and make sure you get GPS. That way, if something happens, you can just cut that thing. So yeah, no, that's a good piece of advice, man. I appreciate it.
No problem.
Did you guys find any cars yet?
No, we haven't looked any further into it. Like I said, we got so many other things going on. That's kind of it's in the future, just not right now.
Yeah, no, I feel you.
Mm-hmm. All right, so let's go ahead and dive into this, you guys. So today we're going to be talking about first-time homebuyer program for the state of California. That's the most I got from you guys. So like I say every time, stay in this class just because, like I said, there's a lot of good information. You guys can compare it from state to state. We've already done Texas, we've already done Florida, and now we're going to do California. So big differences. We already seen a huge difference just between California and or Texas and Florida, the big differences. And now you guys are going to see even more of a difference with California, and California has way more programs. So this is going to be broken up into a 2-part, just because California has so many different first-time homebuyer programs. So if you guys are just tapping in, like I said, if you guys want me to do the first-time homebuyer program for your state, just send me a message within the Well Squad. Just all you have to do is just tell me what your state is, and I'm just collecting it. I'm just kind of going down based to see where people, want to get the information from. So first it was Texas, second it was Florida. So this time we're going to do California. And like I said, one of the main reasons to stay in this is because something might trigger you that might make you want to, either if you don't currently live in the state of California, you might hear something that sounds nice from the program that might make you want to move out there. You might have family out there. You might have friends out there. Eventually, one day you might move out there. You just never know. So it's good to just soak up the knowledge and just kick back and listen. Like I said, you guys don't have to do nothing but just kind of sit back, kick back, do whatever you're doing, and just kind of have an open ear just so you can get the knowledge, right? It never hurts to get free game, free information. So we're going to dive into that. And then when we get to the end, like we always do, we're going to open up Q&A for whatever questions you guys got, whatever you guys are going on. We got some people that are currently in deals right now. We got people that are doing other things. So we're just going to open up the floor, just like how we do. For most of you guys have been rocking with most of these classes, and so you guys know how we get down. So without talking more into it, I know you guys are busy and got things to do besides listening to me talk about real estate, which I can do all day long. Let's just go ahead and dive right into this. Let me bring it up for you guys. All right, cool. Let me go to one of the slides before. I didn't change the date on this. Don't worry about this date. You guys know what today is. That ain't the date. But So these are the things that we've covered in all of our real estate classes. I don't even know what number class this is on anymore, but all the previous classes, or most of them, have been uploaded in the Wealth Squad University. So if you guys click on that tab, you can see the previous classes that we've done. I think there might be maybe one or two that hasn't been uploaded, but we're gonna make sure we get to those. And then once again, if you guys ever have real estate questions, it's a lot easier to message me within the Wealth Squad. I've gotten back to everybody, but maybe 2 or 3 people. That's just because uh, longer messages. So for those of you guys that send me longer messages and really in detail, I kind of scam over it or scan over it real quick, and just kind of take a quick glance. I didn't forget about you guys. I'm not going to not answer your questions. Just for those of you that have much longer questions, it takes me a little bit more time to get back to. So if I haven't answered your question, it's not because I'm not going to. It's just, you have a much longer question. Those people that ask me kind of simple questions, I can kind of answer those quick on the spot. For those of you who kind of need more depth, I don't want to shortchange anybody, so I want to make sure I give you guys a good answer. So if I haven't responded to you, it's because you have a longer message, and that's the reason why. So just a quick rundown. Some of the previous classes, the things that we've talked about, benefits to real estate, right? Like we always talk about the taxes, the appreciation, leveraging it to get into more real estate or other business ventures, the passive income possibility, all that good stuff. What type of expenses to expect within real estate, right? Your principal and interest if you get a mortgage out there, your taxes, the only way you can avoid those is if you're a veteran. And if you know other ways to avoid those, hit me up and let me know so I can avoid some taxes in certain areas. The insurance part of it, utilities, whether if you pay it as a landlord or if you pay it, if you have your tenants pay it, the maintenance, et cetera, all that good stuff. How to figure out how much property you can afford, because it makes no sense to spend all this time doing research on $500,000 properties when you should be in the $250,000 range, right? So we talked about how you can figure out for you, everyone's situations are going to be different. Some people are going to be in the 100 to 200 range. Some people are going to be in the 300 to 500 range. Some people are going to be in the 500,000 to $1 million price range. So everyone's different. Everyone's situation is different, but I make sure that I cover the bare minimums and the basics so everybody can gain knowledge from this stuff. Where to find a property that matches your needs. That's going to be also just as important as to how much property you can afford, whether if you want to invest in state, whether if you want to invest out of state, all that good stuff. How to find a real estate agent, right? That's pretty important, especially if you don't have any knowledge within real estate. You don't have any family or friends that you can talk to about real estate. I talk about how to find a good real estate agent, what to expect from a home inspector when you get your property inspected, how to find a mortgage lender, how to find property managers, how to finance your real estate. That was a 2-part because there's just so much how you can go about financing your real estate. And then we covered the first time home buyers in Texas. We covered the first time home buyer program in Florida. You guys seen the big differences between the two. There was a lot of similarities, but Florida offered a little bit more than what Texas did. Texas just had the 2 programs. They had the one program for just, regular people trying to get a home. And then they also had the program for first responders, medics, police, firefighters, military, teachers, all that. And then they just had another program, whereas Florida, they had, I think it was like 5 different programs that you could tap into. So California, they have, I think it's like 7 or 8 different programs. So we're going to cover a couple of them today. And then I should be able to fit the remainder in the next class that we do. So yeah, let's dive right into it. So the first time homebuyer program in California is called the Cal HFA, and they have different programs within this. So this first one that we're going to dive into is the FHA program that they have out there. So the Cal HFA, FHA, that's a tongue twister, program is an FHA insured loan featuring a Cal HFA 30-year fixed interest rate first mortgage. So these are some of the requirements. For this specific program, you have to occupy the property as a primary resident, and a non-occupant co-borrowers are not allowed. And that's very important, because when we were talking about the program in Florida, we had a lot of people on here that was asking about, having co-signers on there and all these different things that people were trying to do, because, they might have someone whose credit is a little bit better, or they might have someone whose funding is better. So if you're looking to do, if you're looking to have a co-borrower on this lease, they have to be occupying it or else they can't do it. So that's something right away that jumped out. That must be a very big question, because that was one of the main things that was right on there. The Cal HFA borrowers must complete a home buyer education counseling and obtain a certificate of completion through an eligible home buyer counseling organization, which I'm going to talk about and give you guys a link for that one. So for California, it costs $99 to take that home buyer education counseling. And then in Florida, it was free. And then I don't remember Texas having anything. I can't really remember, but that's already some of the differences. So I'm going to try to throw in some of the differences if I can remember them. I'll try to see what I can do. So Meet Cal HFA income limits for this program. So the income limits are going to be different based on the county that you're in. So if you're in California, or if you're curious to see what those income limits are, copy this website that I have right here. It's going to show you exactly for the county. For the most part, it's kind of around the 150 to 200,000 price range. I think on the high end, like in the San Francisco area, I believe it was like 220 or 230, something like that. And then in the, kind of in the outskirts, it was a little bit less than that. It was like in the 150s, 160s, 170s. I think the lowest I've seen was like 120,000, I believe. But you guys can go check that out, just so you can kind of see what the income limits are to be eligible for this program. And what's cool is that the limits are pretty high. So most people will be able to qualify, because a lot of people don't make over 100,000 a year, and there's nothing wrong with that. So a lot of people will be able to qualify for this program, which is pretty dope. I just hope a lot of people take advantage of it. So here are some of the requirements. And like I said, we're still on this first one that we're talking about. It must be a single family, 1-unit residence, including approved condominiums and PUDs. So like you guys seen for another program for Florida, they were allowing a little bit more. This one, for this specific program, it has to be a single family home. So what, it looks like what they're trying to do with this one is really try to stop it from being an investment, but in the long run, it will end up being an investment for you. But they're just trying to cut down, people trying to use this program to get into multifamily, duplex, triplex, fourplex, and so on. Guest houses, granny units, and in-law quarters may be eligible. Manufactured housing is permitted. Condominiums must meet the guidelines of the first mortgage. There is a 5-acre maximum on the size of the property. So they have some pretty good, not too bad on the requirements. Like I said, the only thing really on here that kind of sucks is they don't allow like a duplex or a triplex, but that doesn't mean that you can't use this to your advantage, right? Use this program, get into a home, build up your equity, down the line, refinance, rent it out, let that equity build up, bring your mortgage down, all that good stuff, tax benefits, yada, yada, yada. So interest rates. So interest rates will vary depending on your financial circumstances, lender fees, and other factors. Interest rates can also change daily. So they recommend that you check with the approved loan officer for these programs. And once again, I have the link for you guys. Screenshot it, write it down, take a picture, do whatever you need to do whatever you need to do. And then you can start seeing, what some of the interest rates are. It's pretty cool. They have a pretty good calculator to kind of give you a good idea of the value of the loan versus what you can expect to pay for interest and what your monthly payments will be. So they kind of have everything already broken down for you. So a lot of this stuff for these programs is, in their minds, they put these programs together to help people that are either considered lower income, or people who, just really don't know much about real estate and all that good stuff. So a really good tool on there for you to kind of get a good idea of what your monthly payments will look like. So make sure you guys check that out. Just give it a quick glance over so you can kind of see what they're offering, and you'll get an accurate quote. Cal HFA does not lend money directly to consumers. So they work through and use approved lenders, which you'll find on there to qualify consumers and make all mortgage loans. The fees you pay could be different depending on the lender. And like I said, I'm gonna have a link for you guys to find some lenders out there. And here's samples of APR rates. So that's another link to copy, so you can just go check out. They put, I checked it out. They put some examples of just different loans that they could do based on what your interest rate would be. And it breaks it down like what your different monthly payments would be. So that's another good tool to use and just kind of glance over it, just so you can get a good idea of, you know, how much money you need to be making, how much money you need to save, you know, what type of monthly payments you can start expecting and all that good stuff. The home buyer education requirement, what I started to notice for most of these programs, they kind of have, once you get to the main bulk of all the information, is the rest is kind of very similar. So the home buyer education and how to find a lender and finding the rates is all going to be very similar for California, just the different programs. So the Cal HFA firmly believes that home buyer education and counseling is critical to the success and happiness of a homeowner, and requires home buyer education and counseling for first-time home buyers using this program. So even though they charge for this program, like I said, it's $99, it's going to be good. It's going to be beneficial because it's going to show you, you know, we don't know where things are heading, right? With, you know, the virus and just everything going on in the world. Nobody knows, you know, if we're going to go on a lockdown, who knows what's going to happen. So the cool thing about these programs is they show you guys all the different outlets, right? You may happen to lose your job, or, you know, times might get hard with money. And what you guys don't want to do is you guys don't want to be missing your payments, especially if there's programs out there to help you. So that's the good thing about taking these programs, and make sure you guys take good notes when you guys go through these educational classes, because they're going to show you guys different outlets and what you can do if you come into like a financial crisis, right? If you're not able to make your mortgage, you don't want to just, you know, get it foreclosed, get it taken away from you. You know, build all this equity and things like that. You don't want to just lose it because, you know, you ran into hard times. They're going to have different programs to help you get on your feet. You know, they might freeze your mortgage for X amount of time. There's so many things on there. So it's going to be really good. You're going to get a lot of good information in these programs. A lot of it, if you guys have attended any of our real estate classes, a lot of it's going to be repetitive. You guys go, okay, I remember Ace talking about it with this. A lot of it's going to be that specific state. So I'm gonna mute whoever that was. I'm trying to hear all that. So boom. And then, so who has to take this education course? Only one occupying first time borrower on each loan transaction is who has to take this class. How do you take it? So it's going to be, they have two that you can do, whether it be online, and then they also have an in-person one that they do. I don't know how the in-person one is going right now because of what's going on. You know, everything is kind of funny style. So you just have to reach out to someone to see when they're offering it, or if they're offering it, or if it's just going to be like a Zoom type of thing or whatnot. So anyway, so online is going to be an 8-hour home buyer education and counseling course. It's the only one that this program accepts for online. The fee is $99. Yeah, so like I said, here's the link for that. And then, like I said, you guys copy this, screenshot it. It's going to be something that's going to, you know, take most of your day. So make sure you set. I don't know if it's I didn't look to see if you have to sit down and do it all in 8 hours, or if you can break it up, you know, an hour here, 2 hours here. I don't know how long it's open. So you guys will just have to find that out once you start to take it. I'm sure to tell you. So I would recommend, you know, when you go look at it, to see if it's something that you have to stay in. That way you can schedule, you know, your schedule around being able to take it. I don't know if you can break it up into hour increments, or if you have to sit and take it the whole time. So definitely check before you pay your money, so you know what you're getting yourself into. The live home buyer education and counseling, in person or virtual, through Neighborhood Works America or any HUD approved housing counseling agency, and the fees vary by agency. So how do you apply for this program, right? So it's not a direct lender. Their mortgage products are offered through private loan officers who have been approved and trained by this agency. So these loan officers can help you find out more about the programs and guide you through the home buying process. So that's pretty cool. And here's the link for you guys to find a loan officer in your area. So the good thing about these, and I'll talk about it for each state, is that these specific loan officers know, you know, they might not know all the rules and ins and outs, but they should be able to answer every single question you guys have, because they've had to take trainings to be able to be approved to be a part of this program. And the same thing with the real estate agents and stuff like that. They like them to take training, because, you know, there are specific rules, and it's just a little bit different. So any type of unique questions, or if you think you might, you know, have a question about something, or, you know, you're trying to see if you can do this or that, go to this link, find a lender, and then just reach out to them, and just, you know, all the questions you have, think of all the questions that you might have, write them down, so, you know, you can get those answered from those lenders who constantly deal with these programs in the state on a regular basis. And then these are some documents that you'll want to have ready when you're going to contact the loan officers. Basic stuff. This is, you know, what they're going to want from you: pay stubs, bank statements, your employment history, and your previous tax returns. That's pretty much standard across the board. They just want to know, you know, where your financials are at, what you can afford. They don't want to get you in something that you can't afford. They are a little bit more strict with what they allow with these programs. You know, most of the time, banks will just give you, you know, more than what you can really afford. But the good thing about these programs is they try to be really spot on. They look a little bit more to kind of see, you know, how your finances are. That's just because they don't want to set you up for failure. So they want to make sure, you know, your debt to income is good. They want to make sure, you know, you're on top of things, because they don't want to get you in something they don't want to put you in a boat that has a leak in it, so you're already starting to sink before you even go out. So definitely contact those loan officers, and start building those relationships, because it might come in handy down the road. So once you get out of this program and you want to get into your real estate venture, you know, have this lender that you work with. So definitely start building that relationship. And there goes, you know, you starting your circle of network right there. So here's another program, the Cal Plus. So we looked at the regular. So this is the Cal Plus FHA program. So the Cal Plus program is a FHA insured mortgage with a slightly higher 30-year fixed interest rate than the standard program, and is combined with the zero interest program for closing costs, which we'll talk about the closing costs for this. So here are some of the borrower requirements that you can expect with this one. So you have to occupy the property as a primary resident. So non-occupant and co-borrowers are not allowed, just like the first one. Borrowers must complete the home buyer education, right? Just like the first one. And then you got to meet the income limits. So the income limits for this program are going to be the same for the last program. So a lot of the differences are going to be, you know, the higher fixed interest rate, and then also with the ZIP program that they have. Here are some of the property requirements. It has to be a single family, 1-unit resident, including approved condominiums and PUDs, guest houses, granny units, in-law quarters may be eligible, manufactured housing, condominiums that meet the guidelines, and 5-acre minimum, right? Very similar, exactly just like the first one. And the interest rate is going to be the same. So there's that calculator for you guys to go ahead and take a look at it, so you guys can get an accurate quote for this specific program. And same thing, you know, they don't lend money directly to consumers. Like I said, you got to go through the approved lender, which I gave you guys the link for. And then, like I said, you guys can start reaching out to those approved lenders and go from there. Let's see, for the education. So same thing. So this program is very, very similar. Like I said, you guys seen the only two different things between this one and the other one is that ZIP program, that zero interest program, and then also it has a slightly higher 30-year fixed interest rate than the standard program. And same thing with everything is almost the same. You got to take the education, you know, only one occupying first-time borrower on each loan transaction. You know, you got the two options for how you want to take the education and counseling course, either online, you got that $99 fee, or the in-person or virtual, but it has to be approved. Neighborhood Works of America or any HUD approved housing counseling agency, which would be easy to find. You could just Google those and they'll bring it up. And so the same applies for how you're going to apply for this one, right? You want to find a loan officer in the area. You want to tell them. And the cool thing about this is that when you call these loan officers, you know, you can kind of tell them your situation and what you got going on, and then they'll be able to help you. They'll say, okay, you know, you could apply for this program, and this program. With this program, you'd be looking at having to do this. And then with this program, you'd be looking at possibly doing this and coming out of pocket. So that's the good thing about having options and calling these lenders, is that once you tell them your financials and, you know, what you got going on, they're going to do all that legwork for you. They're going to, you know, They're gonna tell you how much you can afford, you know, what you can get, what you can't get, and all that. So it's gonna really ease up the whole process for when you go to find a real estate agent. You can tell them already, okay, I'm looking for a 3-bedroom, 2-bath. I qualify for 280,000. So anything that's in that, I need something that's turnkey. Turnkey pretty much means that it doesn't need any work. It's move-in ready, right? If you're using this program and you're really trying to come out, you know, as less as possible. And I'm also pretty sure that, you know, they're going to want you to find properties that are turnkey, right? With these programs, a lot of them, they're not looking for you to find properties that need rehab and need work and need 10, 20, $30,000 worth of work. The main purpose of this program is to get you into a house, you know, that, you know, doesn't need any work. It meets all your income requirements and all that good stuff. And then also the same thing, you know, when you contact loan, even if you guys don't use these programs, what you need when you talk to loan officers is going to be, you know, very similar: pay stubs, bank statement, employment history, tax returns, all that good stuff. Excuse me. So here goes the down payment assistance program that I was talking to you guys about a little bit earlier. The money that you put down, or the down payment on your home loan, can be one of the largest hurdles for many first-time home buyers, right? We all know that, you know, most of the time, if you're going to go with FHA, you know, you need that 3.5% down. And then plus you got, you know, your fees, you know, you got appraisals, you got inspections, you got all these things. And all of a sudden, before you know it, you jump from 3.5% down to, realistically, it's more of like 5% to 6% down, which I kind of talk about when you start adding all these other things. If you don't roll this stuff into your loan, because you can roll stuff into your loan, but then that means it's going to make your interest rate higher, your payment higher, all that good stuff. So always look at all your options, weigh all your options out, ask, you know, these lenders and these real estate agents, okay, like, what options do I have? Tell me all my options that I can possibly do. Because sometimes they might just tell you, okay, you can do this and you qualify for this. And then you say, well, what else do I qualify for? What else can I do? What other type of route, you know, can we do? Can I roll anything into my loan? What type of cost can I get the seller to cover? What type of, you know, cost can I get rolled into my loan? And then what will change my loan if I get these costs rolled into it? So you just have to keep asking questions, have an open mind, constantly want to learn, and then just figure out, you know, once they run you all your numbers and tell you what you can and can't do, at that point, you have to, you know, run all your numbers, look at the bigger picture, and see what's going to work for you. All right, let's get back to this. So that's why Cal HFA offers several options for down payment and closing cost assistance. This type of assistance is often called a second or subordinate loan. Cal HFA's subordinate loans are silent seconds, meaning payments on this loan are deferred. So you don't have to make a payment on this assistance until your home is sold, refinanced, or paid in full. So for all you guys, that a lot of people have been asking me this specific question, and there goes your guys' answer right there in black and white. There's no guessing about it. It's deferred, meaning that you don't have to worry about paying it until your home is sold, refinanced, or paid in full. It's that simple. No ifs, ands, or buts to that. So this helps keep your monthly mortgage payment affordable. So that's going to really help you out. And then FHA. So here's some My Home assistance programs. The FHA, My Home offers a deferred payment junior loan of an amount up to the lesser of 3.5% of the purchase price or appraised value to assist with down payment and or closing costs with the cap of $11,000. USDA and conventional, My Home offers a deferred payment junior loan of an amount up to the lesser of 3% of the purchase price or appraised value to assist with down payment and or closing costs with a cap of 11,000. So you guys already kind of see small difference between the FHA versus the USDA and the conventional. And then we get to the VA. They offer a deferred payment junior loan of an amount up to the lesser of 3% of the purchase price or appraised value to assist with the down payment and or closing costs. So if you guys are vets and you want to live in the state of California, use this, because not only will you be able to use your VA, but you know, they always say when you use your VA that you don't have to worry about paying, you know, closing costs. That's it's partially true. You will have closing costs. If you get creative with it, you can, you know, you can work something out with the seller to where they where you tell them to just have them raise the price a certain amount to whatever the your cost would be, and that way it levels it out. I'd have to get a little bit more deeper into talking about that, but there is ways, if you're a veteran and you qualify for the VA, there are tricky ways for you to, creative ways for you to get away with not paying any closing costs, but you have to really explain stuff to the seller and get them to understand what it is that you're trying to do. But you can also use this program, and you can also get this money from the state as well to help you out if you don't feel like getting creative and don't want to do all that. And note that the $11,000 cap does not apply to school employees and fire department employees, or the purchasing new construction home, manufactured home, and homes with ADUs. So a lot of people have asked about construction homes and manufactured homes. So boom, there's your answer for that. So quick one, we kind of ran through those. Like I said, California has a lot. The next class, we're going to get into the last portion of it. Like I said, they offer a lot of good programs. They offer some really good assistance. In my opinion, I still think Florida is the better out of the three that we've discussed so far. Like I said, we got into Texas. Texas was pretty good. Texas, you can get into a house with pretty much nothing down. Florida, you definitely can get into a house with no money down, or very, very little, because they pretty much cover all your down payment costs, which is dope. And you don't have to worry about paying them back for certain programs. So Cali has some good ones. Like I said, we just covered a few of them, and then we talked about the down payment assistance program. So a lot of good information. California, you might have to come out of pocket a little bit, because they don't cover all of everything, but they do cover a good portion. So realistically, using these programs, you could probably get into a house for probably $1,000, maybe 1,500, maybe even a little bit less than that, just depending on the value of the house you find, and all that good stuff. So use these programs to your advantage. I hope you guys took some screenshots and wrote down those links so you guys can go check them out. I'll kind of go back, but right now we're going to open it up to the Q&A side. Here's my social media. You guys know the deal. I don't even need to get into all that. All Well Squad members get a discount on all my courses. Just use Well Squad, and that's that. So right now we're going to open it up to the Q&A side. If you guys haven't joined any of the classes before, this is a safe place. There's no such thing as a stupid question. I don't turn down questions. You guys can ask me whatever you want. If I don't have the info, I'll just let you guys know I don't have the info. I'm not Ask Jeeves. I don't have the answer to everything, but I do have good experience. I have my feet in this real estate world pretty deep, and I got things actively going on right now. So yeah, we'll open the floor up, and you guys just start firing them away.
Hey, what's up, Ace?
What's
So
up,
question, what is a granny unit?
Huh?
What is a granny unit?
A granny unit? So that's funny you ask about that. I had to go look that up because I didn't even really know what a granny unit was. I was thinking that it was like something that a grandma stays in or something, but it's designed. So what it is like a house that's for one or two people, really. So it's like a single family home. There really wasn't nothing to there wasn't really nothing to it. It's just kind of like, how some people will have a house and they'll have like a smaller house in the back.
Yeah.
Yeah,
kind of like like the Fresh Prince of Bel-Air. Yeah, like the Fresh Prince of Bel-Air. How they got the house in the back, kind of.
Right. So kind of like a what do they call them? Like a pool home, like a pool house, but without the pool, right? You know how those are usually a lot smaller. Usually just it's almost like a studio, but a house, almost like that size.
True.
That's kind of what I've seen for just a tiny house. Really, that's like a granny unit.
True. And now a follow-up question to that. So I just thought of it when you were talking about the VA. What if you have a family member that has VA that's not taking advantage of the VA benefits that they have? Can you somehow take advantage of the benefits that they got? Like, for example, go ahead.
You can't necessarily take advantage of them. You have to be their spouse to really kind of take advantage of it, in essence. But you guys would have to be, living together and all that stuff. So there's no way for them to transfer their benefits over to you or nothing like that. So the only way you could really benefit off of it is if it was your spouse who was the military member. Then you could go do all the legwork, and then you could just have your spouse, apply for it, get everything in their name, so you guys can go ahead and get it under you guys' belt.
Okay, true. Thank you.
Yep.
I got a question.
What's up?
So for the first time home buyers, you said that there's no co-borrowing with it. What does that mean? So like
There's no what?
co-borrowing, what is co-borrowing?
Yeah, so like when you have what's the term? I'm drawing a blank. When you have like a cosigner, you know what a cosigner is?
Yeah.
It's the co-borrower, cosigner, same thing.
Okay. So if two people are going in on the loan together, that wouldn't be considered co-borrowing. That's them to get both on it.
What's that? Well, co-borrower, cosigner, it's the same terminology in real estate. It's the same
Okay.
thing.
So what about like spouse? So like me and my fiance, we're not married, but so
Right.
will we
So
be able to do it or no?
yes, you guys will be able to do it. She has to be an occupant of the resident.
Got you.
Okay.
Okay.
Hey, but to go off of that, will they go off of both your
What's
credits, or
that?
whether they just go to go off of his question? Because I'm kind of in the same situation. I'd just rather her get the FHA, but will they go off of hers or both of
For,
ours?
for this specific program, I don't know if they're going to run both, and I don't want to do wrong information. So really, all you'd have to do is contact one of the lenders and just ask them. So hold on, let me bring up the loan officer. So go like right here. So what you would do is this link that's on here. You'll find a loan officer and say, hey, I'm looking to have my wife, my girlfriend. You could even have family members on a lease with you, and just say, hey, for this specific program, do you guys run both of our credit if I want to have someone on there? You just run one person. Like, how does it work? Because I don't want to give you wrong information and be like, yeah, they do, or no, they don't, because I don't know for this program what they do.
And the credit score, I think you said it was, what was it for this one?
For this one, they didn't say what they
Okay.
want minimum requirement for the credit score. So I'm sure the lender will tell it to you. But it's interesting that you bring that up, because that was something I was curious about too, and I didn't see anything on there. But I'm sure more than likely, even like when we did Florida and Texas, it was pretty much the standard of what close to what the FHA requirements are. So it probably is going to be something similar to that if there is any requirement for what your credit score has to be at.
Okay. Okay.
And then I have one more question, or a couple more questions
Go
actually.
ahead.
So I'm in Sacramento, man, and if anybody been watching the news, Sacramento is the hottest housing market in California right now. And just kind of going through the process, kind of we looked up the site that you gave us, and so we're already working with one of those lenders. We have our appointment set for Monday, so we gathered all the stuff we need. But just what should we be looking for? What are the questions we should be asking as far as like, what should we be expecting next in the process? So we're meeting with this guy. What's happening next?
Okay, so when you meet with the loan officer, what they're going to do is, they're going to look at your pay stub, your bank statement, your employment history, your tax. They're going to look at your debt to income ratio. So they're going to want to look and see, they're going to look at your credit. They're going to look and see what type of debts that you have out there. And then they're going to sit you down. They're going to say, okay, based off of, your pay stubs, what you currently make, the debt that you currently have, they're going to say, this is what we can get you a loan for. Or they're going to be like, okay, you don't qualify because your debt to income ratio is too high. We need you to take care of either this. I'm not saying you have any debt. I'm just kind of giving you an example. So they're going to be like, you might have this credit card that might have 5,000 on this credit card and it's maxed out. They might say you need to pay this down to maybe 1,500, and then we'll be able to qualify you for X amount of dollars for a property. And then once you figure out what they'll qualify you for, they'll give you like a pre-approval letter. And then you find a real estate agent that's approved for these programs. You say, hey, I have my pre-approval letter. I'm approved for 250,000. I want to find a house in this area that's 3 bedrooms, 2 bath for 250,000 or less. I need it to be turnkey, meaning that I need it to be ready to go because, I'm dealing with this program and they're already going to know all that stuff. And then once you find a property you like, you go to it, you get it inspected. Once the inspection comes back, if there's no major issues, you guys keep moving forward. You get everything going. The real estate agent will handle all the, the heavy duty work. They'll just send stuff to you for signatures. And then you guys will go to like a title company. You'll sign a whole bunch of documentation, and then boom, they'll get you the keys right after you sign. They'll get you the keys and the property is yours.
Okay, and then what kind of fees should I be expecting? Because it's also on the news too. It's a lot of scamming going on out there. So I don't want to be paying people money for shit I don't gotta really pay.
So for according to this program and what they help you with the down payment assistance and all that stuff, really you should only be looking to be paying for a home inspector, which is around $250 to $500 depending on your area. And that price actually might have gone up just because everything going on. Everything is going up. That's that's the downfall of them sending everybody $1,200 $1,400 is now people are seeing how they're making this money back. The government's going to get their money back one way or another. Inflation went up like crazy, gas is going up like crazy, lumber is going up, oil is going up, bread is going up, eggs, everything, the cost of everything is going up. And this this is how things work, unfortunately. But yeah, so you can be looking to expect to pay for the inspection, and then maybe a little bit
credit
extra,
check.
maybe a little extra, just depending on what everything comes out to, what program you use, how much of an assistance that you can get. But that's the cool thing about when you reach out to the lender and you go sit down with them, they'll be able to show you all that even more. They'll have all that information for you.
Okay. Appreciate it.
No problem. You ever hit up Fixins out there? I was just out there a couple of weeks ago.
We haven't gone.
No, we haven't gone.
Man, you guys gotta check it out.
Fixins all right.
Fixins be hitting. I was just out there.
For sure.
Yep.
Hey, I have a question.
Hey.
So my dad is a veteran, but he's retired, so he's on a fixed income. I was wondering, is it possible for him to get a VA loan but use me as a co-signer, or it strictly has to be only him?
I'm not sure on that. I don't know how they do it, because you said that's your dad.
Yeah.
I don't know how they do it for children. I know for spouses can get put on there. I don't know if kids can be on there. Maybe if you're like, I don't know, have any type of power of attorney maybe, but I'm not sure how that will work. So you guys will just have to contact the main VA and they'll be able to tell you guys if you can do that or not.
Okay.
Yo, Ace, I got a question.
Oh, go ahead. I'm sorry.
No worries. Two-part question, actually.
Yep.
First part, how do you avoid getting out of paying or working around the PMI?
So I talked about that a little bit. I believe I don't know which class. I'm trying to think. Yeah, I don't know if I talked about that. So really, once you get your mortgage down to like 80%, that's one. There's multiple ways that you can do it. So getting your mortgage down to the 80% is one of them. Refinancing is another way to do it. The purchase price. So let's say you purchase a home for, I don't know, 200,000, and once your loan amount gets down to like 78 to 80% of the loan, 78%, then you can request to get it done. There's like 5 or 6 different ways. Yeah. That 78% refinance, when the value of your property has risen to I believe it's 80% or less of the current value of your home for your mortgage.
Okay, cool. Also, my next question is, I definitely had a credit score of over 800 credit score, but I don't have necessarily all the liquid to put down for the closing costs and whatnot. I have it in my 401k that I can borrow from to do it. but I just wanted to get your personal opinion. Would you suggest doing that just to get in while the market is hot? Or would you suggest I keep continuing to just stack until I have the liquid to touch to actually go put my money down?
I know
Because I'm
people,
in California. I'm in California, so you already know how the market is out here, and I'm definitely appreciate you dropping the knowledge on us today with the information. I'm definitely going to take that into consideration. But you know, I just kind of wanted to
are you
get your
looking,
opinion on that.
are you looking to just go the FHA route? Is that what you're looking to do?
Yeah, I was going to see if I could do that. Actually, I'm glad you mentioned that because I had another question regarding the FHA. I had a friend that recently was looking at a property, but the real estate person said something about that the house that they looked for didn't qualify for the FHA. Is that something that's common?
It can be. Like I said, FHA has their requirements, and based on, so FHA has their requirements, right? So they have their set guidelines. So anyone can just look and see what the FHA guidelines are, but that doesn't necessarily mean that a lender will stick to those guidelines. So the lenders have to, the basic what FHA requires, the lenders, they can't say, oh, we can give it to you less than, but the lenders can actually require more. So like, for instance, let's say, it's changed now because COVID, the minimum requirement for the credit score has went up. But before, for FHA, let's say they say, okay, we require anyone between a 500 credit score and a 580 credit score can qualify to get FHA. But then you go to a lender and they can say, hey, we require you to have a 600 or 620 or 650. So lenders can have their own different requirements. And then they can also want the property to be a certain standard as well, because one, FHA has certain standards, so they can't disregard those standards. And then, the lender might, sometimes the lenders will have stricter standards of the actual property, like the railing might have to be a certain way, the foundation might have, all these different little things. So it's just based on really each lender, everyone's going to be different. Some will say, we'll give for this, and some will say we won't give for that. So you just have to constantly, keep reaching out to different lenders and see what their requirements are and what they offer.
Okay, cool. Because I was going to start calling lenders tomorrow to see, kind of get an idea of, what are their requirements based on, information that I've gotten for you. So
yeah. So the good thing about, so I like to, there's so many ways that you can go about. You can either contact lenders first, or you can contact agents first. So what I personally like to do, I like to contact agents first, because a lot of agents have, they have a lot of good lenders. And then most of the agents that I've dealt with, they already kind of know what a lot of the lenders' requirements are. So it kind of keeps me from having to call around. So I'll reach out to a real estate agent. I'll say, hey, I'm looking to get a property, using FHA, this is the amount I'm looking for, and things like that. And then you can say, hey, do you have any lenders that you recommend, or do you already know what they're looking for? And most of the time they're like, oh yeah, I know, at least, every real estate agent should have at least 3 to 5 lenders in their pocket that they can refer you to. I have a real estate agent who's in one state, but she's constantly giving me lenders all over because, she deals with real estate all over the place. So yeah, from my experience, a good real estate agent will have multiple lenders to refer you to. So but there's no, you don't have to go real estate agent first and then lender. You can go lender first if you want. That way, the good thing about going lender first is that they'll tell you exactly what they'll qualify you for to give you a loan. So you don't even have to play the guessing game. So it's like, if you go lender first, you already know. But once you constantly start doing this and what lenders look for, you start to see a lot of similarities. And then you already know, based on what your income is, based on what your debt is, you kind of already know what you'll qualify for later down the road if you continue to stick with real estate and looking to turn this into something that you do full time.
okay, cool. And one more last question.
Yeah.
Based on like credit, like I'm honestly like pretty much one bill from, or one debt, however you want to call it, from being at an 850 credit score. Would you suggest paying that so I can get a better interest rate for the long run, or just holding out?
Once you get above, I believe it's like 710 or 720, it's pretty much irrelevant at that point as far as a lender standpoint.
Okay, cool. Appreciate you, man.
No problem.
Just to touch up on that, I'm in California, and just to give you a heads up, keep in mind people are paying over 50,000 to even I heard 100,000 over asking price.
Oh
So
yeah,
just keep that in mind with your
great.
lender, because you're gonna have to talk to the appraisal, and if you get approved for a certain amount, your lender might not pay for that because it doesn't work out to be enough for what the house is worth. So just keep that in mind if you want to try to overbid for a property and you love it and you want that. No, I'm trying to get it.
Yep.
Keep in mind
Okay,
your lender
based
might not
on
even tell you no.
okay, cool.
Just keep that
Based
in mind.
on like what everybody's doing right here, because I heard that
Yeah.
in California they're going over 50 to 100,000 on.
Yeah, I got people.
Offers,
I
so.
got people giving up. I got people, co-workers, and then some family. They're just trying, like how you said earlier, just stacking up. They're trying to say forget that 3.5. Some people don't even want to mess with the FHA no more. They're trying to get with the cash out or the 20%. They're trying to get as much money as they possibly can, I guess.
Yep.
So
So
I'm
Yeah, I
just trying to
appreciate
give
it.
you a heads up.
So something,
Appreciate
something that I've been doing is I was looking to get a couple fourplexes recently, and then all of a sudden everything shot up. I probably put in like, I don't know, probably like 15 to 20 offers within the last probably like the last 3 months. I probably put in about 20 different offers and not one of them have got accepted. And one property I put 20% over asking price. So it's very
I'm
competitive.
with you, Ace. I'm with you in Texas. I put
Yeah.
in like 4 offers last month, and she's like, they're going over bid. What do you want to do? I was like, it ain't worth it. The cap rate. I don't know if you explained that with them, Ace, as far as
Yeah,
trying to get the cap rated.
I haven't I haven't
Yeah.
tapped too much into the cap rate yet, but yeah,
Okay.
so I had to change up my strategy, and like I talked about last time with you guys, I went the auction route because I'm trying to, keep my foot on this gas with real estate. I don't like the way things are going right now in real estate. It's helping my other properties, so I'm reaping the rewards, but it's also kind of putting a break on me to keep adding properties. So I had to just kind of shift and go a different route. So I had to go the auction route, right? So I was telling you
Can you
guys.
touch on that, Ace? Can you touch on that a little bit,
Yeah,
please?
for sure. Yep, I'll touch on it. So that's what I did, right? You got to adjust, you got to figure it out. I don't like how prices are going. So I've stopped bidding on properties that way, the regular way, just because I don't like how prices are. I don't want to pay, like I said, this is a numbers game. It's a numbers game, and I have my formula. I know exactly what I need my numbers to be at. I know what I need my rent to be at. I know what I need my mortgage rate to be at if I'm going to get a loan from a lender. I know all these things. I know what I want everything to be. And the way things are going right now, it's ugly out here. It's hard for people to get in real estate because it's really the people that got the money are the ones who are really able to keep capitalizing and keep getting these properties. But for me personally, I haven't seen anything to where it's worth it because, I don't know what's going to happen. No one ever knows. Everyone always talks about real estate crash, but I'm not even worried about the real estate crash. I just don't like the prices because you can only rent what the market rents are for. So if you're paying 20% over for a property, 30% over for a property, and it's an investment property, and you can only get so much for rents, and rents are only rents constantly increase, but they only increase so much. It doesn't go from $100 to $500, right? Usually every year when rents increase, it might be $50, $75, $100, maybe on a high end. But if it's not, if it doesn't make sense, don't force anything, you guys. Don't rush to get into anything just because you feel like you need to get into real estate and you want to. Make it make sense. If you find something you like, you put in an offer and it gets rejected, don't be discouraged. It's just part of the game. It's part of how it goes. And right now, the real estate market is hot, so it's like, think about now, it's hot right now. Eventually it's going to get cold. So if you guys just keep constantly putting in offers, for what you feel comfortable with and keep getting knowledge, by the time the market crashes, if it does ever crash, or, when real estate turns into a buyer's market, it's going to benefit you because, you've done the education, you've been stacking your money up, you got your money aside, about all these different programs, you've been reaching out to lenders, you've been reaching out to agents, exactly, you've been writing out you know, what the rents are, what you can get in rent, all these things. You need to prepare yourself for when things get to a level you feel comfortable at, so that way you guys can capitalize on it. And that's what I did when COVID first happened. So when COVID first happened, you know, I tell you guys this all the time, I was able to get my house for crazy cheap. I was able to get other properties for crazy cheap. Chris was able to get his house for crazy cheap. And now within less than a year, we've gotten over 6 figures in equity, right? Just by being greedy when others, you know, when others are scared, right? Like Warren Buffett always says. So don't think that you guys got to rush into anything. You know, it's a slow process, but just keep stacking your money up, keep building your credit up, keep looking at creative ways to get into real estate. Start, you know, reaching out to family members, friends to try to get them to invest so you don't have to put up as much capital. Look for as much OPM as you can. Start talking to property managers, start going to these meetups that they have, you know, these different real estate. That way, you know, if the market does crash or if things slow down and get to a good level, you guys will be well prepared and you'll know already what you're doing. So does anybody have any other questions? I'm gonna kind of talk about
Yes, sir.
my journey.
No,
Go ahead.
hey, appreciate everything, man. You give us so many gems. You need to write a book. But my follow question to some of the questions a guy asked earlier about his 401k. So I got my 401k too, and I was thinking I'm waiting till I already told you I'm trying to get my credit to a point to where it's good. So I think it's kind of a blessing in disguise if my credit's not right, so that when the market does slow down a little bit, I'll be in a better situation. But is it true that you can take your 401k and as long as you're transferring it into an investment, that there's no penalty? And I'm going to call them tomorrow to find out about that. But I wanted to see if you had any insight on that.
Yeah, it's you know, it's a little, that's pulling out of your 401k to get in real estate is definitely doable. I know people who have done it. It's a little more in depth. So, you know, maybe I'll just make a class about it so we can kind of cover, because it's a lot more than just me giving my opinion on it, because, you know, I want to give everybody a full picture of, you know, what exactly it would look like to pull out of your, you know, IRA or pull out of your 401k and things like that. But you can get creative. For those of you that don't know, you know, you can use your IRAs, whether it be a Roth, regular traditional IRA, your 401k. You can use that to pull to get real estate. It's a little bit more to it. So, you know, I kind of want to hold off and kind of just make it into a whole class for you guys. So I'll do that since there was a few of you who have asked about it. I'm sure there's probably other people out there who have asked. So I'll make a good class. I'll make sure I get really good. And I'll even have a few people give me most of the information. I'll black it out just so you guys can kind of see, you know, the process and things like that.
Perfect. And a follow-up question to that. So thank you for that. But so I was doing some research. I was watching some videos the other day, and somebody was like, if you're buying house like in this market right now, because the market's so hot, right? People are utilizing the FHA to get into their first fourplex or triplex, whatever it is, and then cash out refinancing, and then going to get into another property after, which is a good idea. But because the market's so hot, what they were explaining was because the market's so hot, you might cash out refinance and your house might be overvalued. So, for example, yeah, the house is really valued for 200,000, but they're valued because the market at 230,000 or 250,000, right? So if you cash out refinance now, wouldn't that, if like let's say you said the crash happens, or not even the crash, but a correction happens, wouldn't you be over leveraged in that house at that point because they overvalued the house and what you paid for it? Now your mortgage don't make sense, the numbers don't make sense. What is your opinion on that?
Yeah, so that, like I said, that's one of the things, and that's one of the main reasons why I kind of pulled back, is because I don't want to over leverage myself. I don't want to bite off more than I can chew, because like I said, we don't know, just because you know, the housing market is going crazy and, you know, we can get what we can get now. There, you know, there's no guarantee that you'll be able to raise rents to be able to meet, you know, whatever it is that your mortgage is. Or like I said, if you go to refinance, you could be refinancing yourself into some trouble. And I believe that's, I don't know if any of you guys seen one of the big things when they were talking about Grant Cardone, how he had owed all that money and he kind of over leveraged himself. And he kind of talked about it. He kind of ran into that when, you know, this crash happened, but the market ended up correcting itself. Now his portfolio, took that big, I forget the total numbers. It was something crazy in the millions, what he ended up losing, but he ended up gaining it all back plus some because, it took a big dip and then it turned around and shot up. So, if it would have kept diving like it did, he was, like I said, in the whole millions. And that's, when the market crashed before, that's what a lot of people were dealing with. They were having properties that they either couldn't rent out, they weren't able to get the rents that they wanted. So it's like you got all these things that you have to worry about. But it could go the other way. It could just keep going up. Like I said, nobody ever knows. So there never really is no right answer to say you should do this, you should that, because nobody can predict the future. If we all could predict the future, then we all would be making the right decisions all the time. So it's hard to give a good solid answer just because we don't know the future. So it could be very beneficial for someone to do that, refinance right away, get into another property. It could work out for them. It might not work out maybe right away, but maybe it might work out in the long term, or it could go the complete opposite direction. We just never know because we just can't tell the future, and we just don't know where this thing is going, right? We don't know we don't know how long it's going to last. I've been talking to a lot of agents and everyone's saying the same thing. Nobody knows. Nobody, it's all speculation. A lot of people think this, a lot of people think that, but we just really got to go with it. You just got to keep doing something as it's going on. And then whatever happens is going to happen. So you either got to be in it or out of it. It's on you.
Yes, sir. Appreciate it.
I got a question.
Yep.
I was just going to ask, how do you think that the federal judge ruling today on the evictions is going to affect the housing market? And then the second question was about the loans, the lenders. So we went to that website and we were already scheduled with the first guy, but should we go through all 5 of those, or should we, how many of those do you recommend connecting with?
Go ahead. So for these programs, maybe just 1 or 2, maybe just 2, just to see if you're getting any type of different answers or different rates or things like that. But for these type of programs, I think that it's dry and straight cut on, what you're going to get based off of it's going to be based off of your numbers, I believe. But it never hurts to, get in contact with 2 or 3. It doesn't cost you anything. And it just, you can see what your options are. So I would just say, check out maybe 2 to 3 just to see if you see any differences. And if you see major differences, then I would say check all 5 of them, right? So if you see, if you reach out to one that you guys go see and you guys go to another one and you see there's a major difference in the 2, then I would definitely check all of them. But if you don't see too much, maybe a 0.1% different or something so small where it's not even that big of a deal, don't worry about it. But they're
Okay.
gonna.
And then with that, I was gonna ask. What was I gonna ask?
I don't know.
Damn, I lost it. Okay, keep going. Keep going.
And then what was the other one you asked? What was the ruling? Man, I'm so far off of the news. I couldn't even tell you. What was the ruling?
The federal judge lifted the eviction ban. So pretty much
So you can evict people or you can't?
You can.
Oh, you can?
Yeah.
I think that's going to be great. That's going to be great for landlords. It's going to suck for people who can't, it's going to suck for the people who can't, pay anything. But the thing is, a lot of people are just doing people dirty. A lot of people can't afford it and they're just being assholes and not paying. You know what I mean? There's never been a time where I've been living somewhere and I thought I should be able to live somewhere for free. You know what I mean? So I don't know. That's just my opinion on it. But I think it's going to be good because now you'll be able to get people out that are just pretty much squatting in your property. So I think that's going to be, great for people who are landlords and trying to rent out and things like that.
Appreciate it.
Yep. All right, you guys, any last questions before I kind of dive into this auction stuff? All right, no more questions. Cool. All right, so last class, I told you guys that I had an auction coming up. I was looking at tax deeds. So pretty much if, someone doesn't pay their taxes for so long, the bank, takes over and they'll sell the tax deed. And when they sell the tax deed at auction, the banks just want, what they're owed in the taxes. But it's a bidding war. So, you know, it could either go up or it could go down. So I had the very first auction that I did, the first one I had 5 properties. It was in my state, but it was most of them were an hour and a half to 2 hours away. Some of them were 5 hours away. So the ones that were close, I drove by them just to check them out, make sure they were good to go. Everything looked good that I wanted, but when it came time for the auction, they weren't on the list. So I lost money because I had to pay a wiring fee to wire the money from my bank. And then you also have to pay a fee to get access to the auction. So I lost every time you go into an auction, you have to pay a fee. It's not just a one-time thing. So I lost the money for paying into the auction. And then I also lost the money that I had to wire over the money. And then not only that, like I said, the properties that I was going to bid on, they all were taken off the list. So sometimes, you know, they give people, I don't know if it's some type of window or what it is, but if a person pays their taxes for whatever reason, they'll take it off, even though, you know, tax deed is supposed to mean that the bank owns it. So whatever reason they take it off. So the ones that I was looking at, they took it off, and all that was left was land. I didn't want to buy any land. I didn't do any research or anything like that. So I didn't want to do it. So the next day there was another auction, and I seen a bunch of more properties that I was interested in, but this time it was in a different state. So, you know, I had to do as much due diligence as I could from here. You know, I knew some people in the area, but they weren't in town to go look at it for me. The property was good. There wasn't many bidders on it. And, you know, I ended up winning the auction. So I ended up getting it for a good price. It was like about 16 grand was everything that I paid for the house. The house is valued at about 50,000. It needs about, just looking at it, it needs about probably anywhere from on a low end to 10, maybe between 5 and 10 grand on a low end, and probably between 10 and 20 on a high end. So I already hired a property manager group. We already did the contract. They're gearing to go look at it. The paperwork was all transferred over into my name. You know, you got to pay fees and stuff for that. And so, yeah, so now I'm going to have my property managers go look at it. They have contractors that they deal with. So they're going to go look at it. They're going to get the inspection done for me. They're going to tell me, you know, what the bill is going to be to get it, you know, rent ready. And then the rent in the area that I'm going to be in is great rent. So it's going to be, you know, I don't know exactly how it's going to turn out, right? Because it could be something completely horribly wrong with this property. But from the pictures and everything that I've seen and the research that I've done, it looked pretty decent. You know, the foundation, the roofing, the outside, everything looked pretty solid. But you just never know until you go look in the property. So my plans with this property is, you know, I'm going to come out of pocket. It's almost kind of like a burr in essence, because, you know, I'm buying it, I'm rehabbing it. I'm going to eventually refinance it. I'm going to rent it out, and I'm going to, you know, do all this all over again. So once it's all said and done, once everything gets taken care of and it's rent ready, you know, I'm going to get it ready to rent it out, but I'm also going to list it for sale just because, just to keep my options open, because I just, you know, you just never know. Someone might come around with the right offer. So if I can, you know, this might be a flip, this might be a burr, this might just be, I still might not even do that. I might just keep owning it outright if I can get some renters in there right away. So I have 3 to 4 different routes that I'm going to go with this. I really don't know yet. So every class that we come back, I'll have a new update for you guys. So I'm gonna have, because I think my property manager should be getting with me either tomorrow or Friday after they go inspect it. So the next time we have a class together, I should have a new update for you guys. So that's kind of where I'm at with that property. If you guys have any questions about that, go ahead and fire off.
I got a question. So is that so you paid the 16,000 cash, like, or
So
how did that work?
The bidding started out at $1. Or no, I'm sorry, not that one. I got another one that I'm bidding on. So this one, it started out, it was like 2,200 is what it started out at, 2,300, something like that. And the bidding went all the way up to like 16 and some change.
Okay. And then my second question was, how much do you have to pay like the property management company? How does that work?
So they charge 10% rent. So right now that I don't have anybody in there, they're not going to charge me. So they have a upfront they want me to send them $300 that they keep on retainer. That's just going to be, if there's any issues that come up, they have the money to, fix quick fix issues. So they want a $300 retainer. They charge 10% of the rents. If there's any late rents, they get 50% of the late rent. So it's really not a bad deal for me. So really, I'm just looking at the 10% of monthly rents is what I'm going to be paying them every month. So the area that this property is in is looking like rents go for about between 800 to 900. So on a high end, if I can get it rented out for 900, I'll be paying $90 a month to the property manager. And then on the low end, I'll be paying them $80 a month to manage it for me.
Okay, and then you said the property is worth 50K.
Yep.
Sorry if I'm getting too personal, but so what is your like house note? What does that mean? Like, is it do you own it outright now or?
I own it outright. Mm-hmm.
Okay.
Yep,
so you got the 50K house for 16K.
Yep.
Damn. Okay.
Yeah, pretty dope, man. So yeah, so like I said, I don't know what route I'm gonna go with it yet. My first thing was I just wanted to get the property, and then like I said, I got it. So now, gonna get it inspected, get, whatever type of rehab. So realistically, the house is worth 50K. If I only pay 16K, that means I have 34,000 in wiggle room for if it needs whatever type of rehab. So that's gonna leave me some good wiggle room, right? This property ain't gonna need no more than 20K. So that, even if I put 20,000 into it, that leaves me with 14,000 in equity that I have wiggle room to do something with.
Hey, quick question. So you bought the property for 16K. It's worth 50K. But I thought I was under the understanding that with the tax lien, you got to wait the 2 years and the property owner has the opportunity. And maybe I missed something, but
tax lien and you're thinking of tax lien. I bought it off a tax deed, complete different thing.
also you bought this as a tax deed at a tax deed auction.
Yep.
Ah, interesting. I need to do some research into that. Okay. How is it different? Can you explain how it's different a little bit?
So the lien is exactly like you said. They have that time. The deed is supposed to mean that they don't have any time. Once you buy it, it's yours. So if there's any back taxes, you got to pay that, right? So I made sure there was no back taxes. So if there's any back taxes, if some areas, you might have water, sewer, utility bills that you still might have to pay, all these different things. There might be, irrigation issues. There might be zoning issues, right? So that just comes with you got to do your due diligence and figure all that stuff out, and make sure you're not getting a sour apple.
True. Good to know. I'm gonna see if they've got some, because the tax lien auction's coming up in on the 4th, or that was actually 2 days ago. So we had that, and I tried to get access to it, but like I said, you told me to go down there, and I went down there, and they're like, they don't even know what I'm talking about. So like, I don't know why. So I don't know, for some reason down here, it's hard for me to get in touch with people. But what I'm thinking is I'm going to speak to a realtor and see if maybe they can help me out and see if they can get me into that. But that's good to know. The tax deed.
Florida's the top place for tax lien and tax deeds too.
Yeah, I don't know why. When I went down there, the clerk was like, I don't know. Maybe she was new. I don't know what it was.
Maybe because mine out here, I go talk to them all the time. They let me know when the auction days are. They let me know everything I need. Like, they gave me good info.
Yeah, she wasn't having a good day. She was giving me some attitude too, so I think she was just having a bad day that day. So, but yeah, I'm gonna talk to a realtor and stuff too, because the tax deed, that's actually a good option right now. If you like, for example, like I was telling you, I don't want to get into a house that maybe is overvalued. You can get something at a discount like that. That's a good option that you can get into right now and not really wait. So that's a good idea. Thank you.
The only downfalls to these auctions is that you can't see inside of them. So it's like you really don't know what you're getting yourself into. But this is my thought process with it. I figured on a high end, it's going to need. So my max bid for this property was 20,000, because I knew that if I can get it for 20K, if it's worth 50. If it needs about, on a high end, it needs 20K, so I'll be all in for 40. That still leaves me with about 10K in equity or wiggle room to kind of play with if I want to get creative or do anything. So that was kind of my thought process with it. So not saying that it's going to need that much work. It might only need 5K, and then I could walk away, having this property for only 21,000, and then get some renters in there, collect that rent. And if I want to sell it, I can. I don't know. We'll see. Time will tell. Time will tell what I'll do with this. But either way, I'm gonna make it work, right? Even if I got to just sit and hold this property for 5-10 years and just pay the property taxes, which is about, I think it's like 90 in the area. So, 890, if I only pay, even if I don't put any work into it, I'm out of pocket right now, 16 grand, put 890 into it for the next, 10 years. That's another 9 to 10 grand as, taxes constantly increase. I'll be all in for 26K still, even, with that still has wiggle room if I just keep it listed the whole time and just wait till someone offers me 50,000. So I'll make my money plus 30K. If I got to wait 5-10 years, that's 30K that, for me to just sit and wait.
Now,
Your
but if you
question
renovate
is on.
if you renovate it, won't you get more? Won't the equity in the house go up technically?
Yeah, well, I'll have to get it reappraised and things like that. But the equity will go up some depending on, what type of value I add to it. But I did comps in the area, and similar homes that look in good shape were going for about 60 to 70. So I might be able to get, 20,000 more in equity by fixing it up. By putting that 20K into it might boost up my equity into it. So like I said, time will tell. Time will tell once I get to that bridge.
Yes, sir. Thank you.
No problem.
Yo, Ace, are you gonna do a class teaching like all this information and how to get into it and like how you go about acquiring the information?
Yep, sure am. Like
Man,
I
man, congratulations, bro. That's a win, super
said,
win when you
yeah,
look at it from, a longer perspective on whether it be buy or hold or, you decide to sell or whatever. That's a win. Also, did you do it based on, like where you have property managers or you just kind of flip the coin?
I just kind of flipped the coin. I was ready to get a property, and I actually started looking at tax deeds, tax liens about, man, when was that? Probably 2019. 2019, I was over at 2019, I was over at Chris's house. We were chilling downstairs. We were watching YouTube videos, and we crossed these tax lien, tax deeds. We ended up buying this guy's course from it. And then, we kind of went heavy on it. And then coronavirus happened. We kind of fell back from the tax lien, tax deeds because the first one we were going to go to was in May, I believe. Yeah, it was in May. And we all know what happened in March. Everything got shut down March of 2020. So it just kind of got, I didn't stop with real estate, but I just kind of stopped with that portion of real estate. And I just went, got my house, got another investment property, all these other things, and then put that kind of on the back burner. But I had learned all the information, so I kind of knew a little bit about it. And then, coming around now, I was trying to get a fourplex, and then, prices are crazy. And I'm like, fuck that. I'm not trying to pay all this money, 20% over asking. I'm not even the top 5 out of 20 people, and I'm putting 20% over. So I'm like, nah, I'm cool on that. Let me try another route. So I got back into diving into all these different auctions. There's so many of them. It's like, damn. And then, I just was all day, just when I wake up, look at auctions, before I go to bed, looking at all these auctions, writing all these properties down, doing the research on the property, doing the research in the area, looking at the schools, trying to figure out what the rents are going for, trying to find comparables for this property in the area, reaching out to property managers, reaching out to lenders. So I already have 4 lenders. I already reached out to them. I told them, hey, just got this property. I might want to refinance. I don't know yet. So I already have 4 lenders that I might possibly use. I reached out to 3 different property managers. The first one that got back to me, I like what they were talking about. The second one that got back to me, I didn't really like some of the things that they were saying. The third one that got back to me, they got back to me too long. So I'm like, nah, I don't want to deal with no one that's not going to get back to me quick. So I went with the first one. The numbers were good. What they were offering was good. And I just liked the whole vibe, how they got everything done. They handled everything. They're like, yeah, we'll make sure we take care of you. We'll send you bids, make sure you get the best price, all that. So that's just kind of where I'm at with it right now.
Nice. And did you when you pay something off, like when you have something like that free and clear, can you would basically refinance and pull equity out on it to, like, say for instance, purchase another one?
That's kind of what the whole BRRRR process is, right? Find a property that's really undervalued, you buy it, put the money in it to get it to that ARV, that after repair value,
Right.
Take it to the bank, refinance, because you own it free and clear when you buy it. And the first part of the BRRRR is buy, right? So that means you're buying it for whatever that value is. So that means, that's your money tied up into that property. And then when you go to do that refinance, you obviously want to try to collect, you know, after you rehab it, you want to get that ARV to as high as you can. So that way, when you go to refi, you can, you know, get at least most of your money back, if not
Money
close
back,
to it.
right?
So even if
Right.
even if I do all this, you know, if I can only get, you know, 15,000 back after I refinance, that's cool. That's enough money for me to go ahead. If I got to find another property, that means if I find another one that's in that 20,000 range, I only got to come out of pocket 5, and I can just turn around and do this whole process all over again. I'm okay
Man,
with that.
congratulations, brother.
Appreciate it. You guys got any other questions on how the auction went or anything like that?
Actually, one more quick question. I didn't realize that you mentioned earlier a person when it's a tax deed. I know with a tax lien they can pay their taxes and they good, but man, they can even do that with tax deeds where you know what I'm saying you can
No,
completely waste all that money.
not with the, I don't know that last auction that I was, the one where the ones got taken off. I believe it was tax
Tax
deed
lien.
and tax liens all in the same
Oh, okay, yeah, because I know with tax liens they could pay the taxes and not lose their property, but I was under the impression with tax deeds they could.
Yeah, tax deeds, that thing is in the bank, but tax liens, they got you know, I think they give them 2 years. Most states are 2 years, but it's cool because let's say you buy a tax lien for 1,500. You know, most states have a certain, I believe it's anywhere from like 10 to 20, some states are even 20% interest every month that person, you know,
They
wants
owe
to,
you.
that they owe you.
Yeah, yeah, yeah.
How many properties were at that auction?
Which one? The one where I won one, or the one where I lost, where I didn't get any?
Well, the one that you're speaking on right now, the one that you won, and the one that you lost.
Both.
The
It'll
one,
be both. Yeah.
the one that I didn't win anything, there was 160 different properties, but it was a mix of, some of them was land, some of them were actual houses, some of them was lot, just like a plot of land, like a small lot. So it was a mix of a lot of different stuff. Sometimes you'll find agriculture stuff in there. But the one that I won, there was like 12. It was like 12 properties in there, and it was which one was that? It was a county auction, because you got sheriff auctions, you have county auctions, and then you got, and there's so many different auctions out there and things that you can do. You just got to get out there and really find it.
Now, was the auction was it for just the particular city or is it for multiple cities?
Yeah, so some auctions will be by county. So some auctions are just going to be the county, and that's the county doing the sale. Some of them are going to be a bank might get with like a third party and they might do it. Some of them might be the sheriff department. Some of them might be like a government auction. There's so many out there. And the ones that I was involved with, literally I was looking, going back and forth, looking at all these different auctions. So it's pretty cool. There's a lot of stuff out there.
Do they at least give you a picture of like the outside of the property, or
Yeah, so so they'll give you some of them will give you the address, so you can actually go look, you know, do your own research on the address. Some of them have it by like the parcel number, so you have to learn how to read parcel numbers so you can go into
right?
the database and figure out, okay, this, you know, parcel number this, lot number this, section this, and it will tell you, okay, if you go into the county's database, it'll say, okay, this is that address, and then you just do your research from there.
How would that work if a property is currently occupied though, or none of them occupied?
They still, I don't even know if mine's occupied or not. They don't even know, because and they tell you that in the auction. It's a disclaimer. They say, you know, they try to put as much information as they can, but you know, they're just trying to collect their money, so they don't do a whole bunch of work. You know,
Due diligence, right?
they might send somebody out to take, you know, a couple pictures of the front, a couple pictures of the side, a couple pictures of the back. Sometimes you might have them that will show pictures on the inside. Sometimes they won't. Sometimes they won't have any pictures at all. So it's like, you really just gotta, man, you really gotta do your due diligence on it. And you know, that's something that they harp on. Make sure you do your due diligence. Make sure there's, you know what type of taxes that are owed on it, or if there's any delinquent like utilities, and like, because all that transfers over to you. And you know, I got in a rabbit hole with this stuff. I seen some people talk about some crazy horror stories where something, the land, the property was on something, and you know, they owed the county like 15 grand or something crazy like that. So it's like, you know, if the person would have did their due diligence, they would have figured out that that property was on whatever land and it was back owed. So it can get really crazy. So it's a learning process for me. It's pretty fun. It's cool. Like I don't mind the challenge, right? Whatever happens with this property is gonna happen. But you know, you can't make stuff happen if you just sit back and don't do anything. So
Sit on your hands.
Yeah.
No, I was gonna ask that. What was your, how did you feel about, or how do you feel about it?
I don't even care, man. I'm just like, I don't have any emotion when it comes to like, I don't have any emotion when it comes to like real estate and money and all this stuff, right? It's all of it is just a tool. You got to figure out how to, make your money, make you more money, how to figure out how to get this real estate to make you money and things like that. So I don't have any emotion tied into any of my properties. When like I just had to spend $1,000. I had to spend $1,000 for one of my properties to get trees removed. Like, it is what it is, right? That's just part of real estate. When you own real estate, it's like you can't just expect it to be all good, right? There's going to be bad, there's going to be battles, but there is going to be good that comes from it. You just don't never know when, but you got to dive in so you don't miss out on the good opportunities.
No doubt.
So Ace, if that property is occupied right now, or is it kind of like how when you do note investing, right? Are you going to like speak to that person and say, hey, is this the same as note investing, or is it a little bit different?
It's way different. If there's somebody in the house, I'm gonna show up with a ski mask and the Glock. They gonna get out of there. I'm playing, y'all. I ain't gonna do that, but they ain't gonna trust me. I'm gonna make sure they get up out of there. If I gotta buy a flight out there to get them out myself, I'll make sure they get out of there. But no, I'll have them, like I said, especially the rules are changing now. COVID, that with people being able to stay in properties. So I'll have my property manager do the proper, eviction to, get the sheriff involved if it needs to be, to make sure we get those people out of there. But yeah, if there are people in there, I don't know if there are times, because sometimes, those people just stop paying their taxes and they just stay in the property. They'll cut off the electricity and stuff, and people will still be there. And they even tell you when you do these auctions, they say there still might be somebody occupying this resident. So it's going to be a bridge I cross when we get there.
Yes, sir. Thank you.
Yep.
So with the auctions, do they list so how do you do your research ahead of time? Is there like a website and they list everything?
Yeah, so there's so many different, if you guys want to look at one, you guys can just go to auctions.com. That's one that's pretty easy to look at. There's another one called landhub.com if you guys just want to go take a look at them, but they're all different. You guys are going to see, it's so interesting to see like all these different auction sites and what they show, what they don't show. So the one that I use, it had the address, it had a few pictures on there. It said that there were no taxes owed, but they always say that might not be accurate, right? Everything they tell you, they say no back taxes owed, but that might be wrong. So they pretty much just tell you like this could be a shitty property and we're not going to be liable. So they pretty much let you know once you buy this, it's yours. Like you got to deal with, you might be sitting on a gold mine, or you might be sitting on, some trash. You never know. But so what I did was I got the address of the property. I went on like Google Maps so I could look at the area. I went on all the websites like Zillow, Redfin, all that, to just kind of see, what information they had on there. Yeah, that was pretty much about it. I'm trying to think if I did anything else, because it's in a completely different state. It was last minute, so I didn't have anybody that I could have go check on it for me. I ran the numbers. I figured out what the rents were going for in that area. I looked at comparables. So I had 24 hours to kind of do some diligence. So I just made sure the rent was good and all that good stuff.
What is your opinion on taking out, say, for instance, a personal loan to get into, the real estate,
right,
or get into even bidding on auctions?
Yeah. I'd say, you know, what is going to be your interest rate, right? What is it going to cost you to borrow that money? How soon will you be able to get that money back? Or are you able, if you're going to use it to get into real estate, how quickly can you start renting out that property and collect the rent? And how much of that can you put towards that loan? So it just has to make sense. But I'm definitely for it. You know, I tell people, if you're responsible enough, leverage your credit cards, leverage, you know, if you got good credit, you can get these good loans. If you can get a loan, if you can get a better loan from a bank, a better personal loan, why would you go, you know, refinance and get a crazier loan? So it's like, it just has to make sense. There's so many different ways how you can get creative with it. You just have to do what makes sense and have a plan, right? Don't just get the money, go blow it and spend it on something that's not going to make you a good enough return to cover whatever those payments are, and then also put some money in your pocket.
Yeah, and that's right. That's why I posed that question, because I am financially responsible and have the credit to go get approved for that. But I'm just, you know,
I do it all the time. I do it all the time. I'll max out my credit cards because I'll know when I get the money back. So I'm, you know, making sure I'm not paying no crazy interest. So a lot of times I'll max my cards out, or if I need to go get a new tub for this property, or if I need to go get this done, instead of just paying my own cash, I'll just swipe the card, let my tenants, you know, pay back, if, you know, depending on what the interest is looking like or whatever. You know, just it's never like cut and dry. I'll never just be like, nope, I pay cash for everything, because sometimes I just don't like giving up my cash, because I like to use, you know, my cash for other things. I want it to go to this or that. So it's like, if it makes sense for me, you know, if I have to take out $1,000 loan, and, you know, the monthly payments are $100 a month on that, but I'm able to take out that $1,000 loan, I'm able to make $200 a month from that loan. That means I can pay that loan back, that 100, and I'm putting $100 in my pocket. So it's like, you just have to do what makes sense. So, you know, have a good game plan, know what your, you know, payments are going to be, know what the interest is going to be, and then just do what makes sense.
No doubt.
So what state was that property that you bought it in?
It was in Illinois.
Illinois.
Yep.
Dang, they got some good.
Oh yeah, Illinois. Man, someone from I like saying Illinois, putting the Z or the S on there. Some dude tried to check me. So now all the time I always just say Illinois, just to drive people from Illinois crazy.
Yeah, true.
But yeah, it's out there. It's out in Illinois.
So let me ask you this. I don't think I ever asked you this. What was the first state that you started investing properties in, or like in properties? Was it the state that you live in, or was it in another state?
The very first state I ever invested in was Idaho.
What was your reasoning for that?
They projected Idaho to grow like Seattle had grew within the next 15 years. This was a while ago. And now it's true on course.
True. Good to know. So what would your recommendation be for like another up and coming state? I'm gonna do some research on it, but yeah,
so something I like to do is I like to research and see the fastest growing cities, and I like to look at the top 20, and I usually like to go to the bottom 15, because usually the top 10 are going to be the ones that are already starting to grow and people are already starting to invest in those markets. So you figure the last 15 are probably not touched yet, so I like to start looking at those markets.
True, that's smart. Thank you, man.
No problem. Any other questions, you guys? You guys got some good questions today.
I remember that other question about the property stuff that I wanted to ask.
Go ahead.
And it was just, so when I'm meeting with the lender, should I go in with a set amount that I want to, hey, like I need 650, make it happen?
Well, so are you going to use one of these programs, or are you using the FHA?
Yeah, I want to try to use one of the programs.
One of the programs. Yeah, there's going to be a so first of all, the cap, once you'll see there's going to be a cap for a certain state. So your income, like if your income levels is going to be over that cap, then you're not going to qualify for any of these programs. But they're going to tell you, okay, this is how much house that you can get with this program, and they'll tell you when you meet with the lenders. They're going to tell you, because there's going to be a cap that they're going to allow you to get for these programs. It's not going to just be like a free for all. You can just go get whatever house you want. Just like FHA, VA used to have a cap, but they just took that cap away. But FHA has a cap on how much house you can get. I know these programs are going to have a cap as well.
Okay, thank you.
Yep.
Hi, Ace.
Hi.
Question for you.
Yep.
So I'm currently looking at a first-time home buyer program in New Jersey because New York is out of my league.
Uh-huh.
So in your experience with obtaining any kind of like loans, mortgages, are they considering your prior year's income or your current year's income? Or do they use like a combination of both? Because
No, they look at they're gonna look at your W-2s and everything, but they're gonna be worried about your most of the time they look at like your last 3 pay stubs. Most of the people I've dealt with looked at the last 3 pay stubs or last 3 months of pay stubs, and they kind of base it off of that. And then it's also, like I said, your debt to income, you know, the area that you're in, if you're gonna try to go conventional, FHA, all these things, you know, your credit score, all that stuff will start to come into effect. But they don't look at, they're not going to go off of like what you were making last year. It's going to be what you're making recently.
okay. The only reason why I'm asking that is because I had a change in jobs.
Uh-huh.
So I may now make too much for some of these programs. So I was just trying to see how I can you know, make it work.
I hear you. Yeah, get creative if you want to, you know, set yourself up a trust and pay yourself that way so you can control how much you make, and it's still you're not losing any money by that. So get creative. There's a lot of ways to get creative. Wealthy people do it all the time. So, you know, us regular people need to do it too.
Yeah, and one of the things I'm doing is just putting more in my 401k. So, you know, that money's out of, I guess, investment reach without going through a bunch of hoops. So.
Right. And for any of you guys out there listening, you can get into real estate off of dividend income. That can be your proof of income if you guys didn't know that.
Are there any tax benefits to that?
What's that?
Are there any tax benefits to that? Like, for example, like, you know, you pay taxes on your dividends, but
right.
Let's say, is it the same thing? Just
you're using that as your proof of income. So it's not like a tax benefit or anything. You're just, you know, which if you've had 2 years of steady dividend income, you can use that as proof. So they're going to look at how long you've been invested in those specific stocks, how much you've made the last 2 years consistently with those stocks, and they're going to average those numbers out. And then that will they'll let you know how much of that you can use as your proof of income.
Dang, that's good to know. Because I was going to ask, because like, for example, I always thought about this. Like, for example, I have my 9 to 5 right now, right? So I'm going to use that as my 2 years of income and stuff like that. But let's say I have 5 properties. I want to walk away from my 9 to 5. How do you go about getting approved for the FHA from that standpoint?
You got to have whatever your income is. If they're going to want to look at, you know, your W-2s, whether it be the 1099 or however you're making your money, they need to see some money coming in. It needs to be consistent. So like I said, every lender is going to be different. Some will allow you to, you know, if you've had rental properties under your belt for 2 or 3 years and the rents have been consistent and they're all rented out, and based on if you still have a mortgage or not. So they look at any mortgages that you currently have out there. They look at how much rents you've been constantly bringing in. So you can use other rents from rental properties as income.
Oh, okay. Good to know. Good to know.
Yo, Ace, I got a very unique situation.
What's up?
So I changed careers myself when COVID hit, and I'm working as a caregiver. I get paid through the trust of the person I take care of. They're actually going to be contributing to my mortgage or to my monthly payment by paying me rent to, you know, actually for the person that I take care of on whatever house I decide to get or buy. Would you think that would have effect on like what I'll get as far as financing, like when I go to explain that to them?
Does that pay? Do you have to? What is that? So did you have to did you fill anything out? Like, do you get a W-2 or anything like that from doing this?
Yeah. So basically, they pay me to take care of this person, as well as pay like so like right now I'm living in the mountains of New Mexico, but we're about to move to back to California where we're from.
Uh-huh.
And I'm gonna be living with the person that hired me to take care of this person
Uh-huh.
in the meantime until either I purchase a house and they're gonna pay me as well as like they're paying me. So I have a W-2 form. I get paid this, obviously I get paid a certain amount a month. But while we're living here, they're paying this person's, to rent out this space. But when I go back to California, it's going to be the same situation unless I get a house. Like if I get a house, then they would still pay me my regular pay, but they're also going to pay me for rent to house them at my house.
Is
You see what I
that
mean?
is that rent that they're gonna pay you? Is that gonna show up on your W-2, or is that gonna be like some under the table type of stuff?
Yeah, it's going to be completely under the table and pretty much separate from that.
Okay, so yeah, so all the banks and stuff are gonna be looking at is what shows up like on your W-2s. So anything that you
Okay.
get like under the table and stuff like that, I mean, they're gonna ask, and I don't want to tell no one nothing to get anybody in trouble. So always be honest, but hey, everybody's grown. You do what you want to do.
I mean, I'm not going to disclose to them that because they're paying me to pay essentially to pay my rent. You see what I'm saying? So I'm not
Yeah.
going to disclose that, but at the same time,
So yeah,
does it?
as long as if it's not like on your W-2s and track no way, then if you don't declare it, then shit, yeah, they're just gonna look at if you get pay stubs or anything like that. That's all they're gonna look at. They're gonna look at. So I will say this. So be careful with that. And I'm not trying to tell you nothing crazy, but I just I'm just trying to look out for you. So if they pay that to you and it goes to your bank, when they look at your bank, they're going to want to know, if it's a good amount of money. They might question, hey, what we see you make, you claim that you make, 5,000 a month, but we see that there's 6,500 a month being deposited from this area. So if you're making 5,000, where's this other 1,500 coming from? You see what I'm saying? So just
No, I hear you. The only reason I brought up and mentioned it to you is because I have a long-standing relationship with the people, their family. You know what I mean? I've known them since I was a little boy. So everything is going to be completely separate, as far as like them paying for my rent or whatever. I was just kind of,
it's something I always,
would it make a difference me being open and honest about it, or what I'm saying, would it affect me in any way? Because it's not going to be on my W-2 form.
Right.
That's why I say that. And it's not something that's going to get transferred. It's going to get a check that I get from them every month.
So I always tell people, do everything by the book, stay, if they want to know this, tell them. But I do tell people this, right? I know that they, once I figured out the game on, what lenders look for and what they want, they do get up in your business. And, I have multiple bank accounts, right? And I have one set bank account that I keep clean that has, good transactions, money coming in, money going out. If I do want to get a loan from a bank, I keep it clean. And then other money that has like big deposits, big money coming in and going out, I have completely different bank accounts for that I never, disclose, that I don't want to disclose, just because I don't want them all up in my business. So the things that they need to know and I know what's needed to qualify. I always tell people, keep a clean account, because, if there's discrepancies, if they want to, they're going to want to know, well, what's this money coming from? Where's this money going to? Right. Because they want to make sure that they're not, giving a loan to someone who's doing money laundering or anything fraudulent, right? I don't do anything fraudulent or illegal. I just don't want people all up in my business and, things like that. So I keep another account that I, do things. If I want to get a loan, then I can do that. And there you go.
No, that's why I asked, because I have two accounts as well that same way,
Yep.
and, that's with the route I was kind of,
Right.
kind of going with that or whatever.
Right.
But yeah, I definitely appreciate that.
No problem.
Also too, and they also have the option of, they're saying that they'll just buy whatever house I decide outright, and I would pay the trust back. But I don't know. I just don't feel like that's a good idea.
Yeah. Man, if you're able to, if you're close with them, ask them, what lawyer that helped them set up their trust, and look more into it, man. Setting up a trust is a game changer, especially if you're
Okay, no doubt.
especially if you're looking to really get into this real estate world. And I don't know if you invest, in other things, it can really, really help you out down the road. And anybody else listening,
No, I'm invested in dividend stock, paying stocks and whatnot. So
definitely,
yeah,
start looking at, especially, since they already have it set up and they already know, just, hey, I'm thinking about possibly setting up a trust too, because there's a lot of good benefits to doing it. So definitely tap in with them, man. Sounds like you might have some good people to set you up, help set you
no,
up,
no,
give you some good information.
yeah, appreciate it. Yeah, I definitely will.
No problem.
Hey, so in regards to the trust, there's a lot of tax benefits to having a trust too. Like, God forbid you were to die. Like, if you have children, you got millions of dollars. That
Yep.
trust, they can't tax that money too. So there's a lot of good stuff about that. But my question is for example, with the Turo thing that I'm about to get started, right? Should I make because I was gonna do it through my regular bank account. Should I make a separate bank account for that? Because I know you're not supposed to keep, one thing I hear every single CPA I speak to, every single person I speak to in regards to business, they say keep your personal transactions, your business transactions separate.
So definitely, and then that'll just help you, like, and I would say go open up a business account. You know what I mean? Do that, because it is going to be a business, and it'll be some great, some good write-offs, and then you don't know how far you might end up going with this, right? You might end up getting a whole fleet of 10 to 20 cars. And now, if you've been working on building up your business credit, you can start using your business credit to purchase your vehicles every time.
Yeah, I think you were mentioning that, or I think there's a guy, CEO Matty J was talking about that. Yep. And he was like, even if you get one car, go start an LLC. That way you can start like developing your business credit and stuff like that. Because then you can leverage your business credit to go get more cars. Yep. And then so I think I'm going to do that. But even with one car, I wanted to ask about this. With just one car, do you recommend me starting an LLC? It's cheap in Florida, but
why not? Why not? Because, like I said, you don't know where this is going to go, and it's not going to cost you much to start an LLC. It's free to open up a business, bank account. You can start building your business credit. You can keep all everything that you need to spend for that. As far as like insurance and all that stuff, you can have everything paid from that business side of it, so you don't have to worry about it touching into your personal account. When it comes time to do taxes, you can just hand everything over to your CPA and you're good to go. And then, like I said, you might turn this into something. Like I said, you might see that, okay, I'm profiting $200, $300, $400, $500 a month. Now, if I start adding cars, now I'm gonna times that by 2, I'm gonna times it by 3, I'm gonna times it by 5, I'm gonna times it by 10. And as you keep growing, your business account is going to keep growing. So now your business credit is going to keep growing. Now you're going to have more and more leverage from the business account side. So now, the first 2 or 3 cars you might have to use with your own money. By car 3, now you're using the business credit. Car 4, business credit. Car 5, business credit. Car 6, business credit. And they're just going to keep, as you keep adding more cars and keep making more money, you're going to let that pay for it. And it's going to be a machine that's just going to keep growing and keep building.
Yeah, that's true. I didn't even think about that. That's smart. I'm gonna do that tomorrow. Appreciate it, bro.
Guy. Cool. All right. Any other questions, you guys? Man, we've been at this thing for a minute. You guys are some troopers.
Hey, we could do this all night. We could do this all night.
We've almost been on for 2 hours.
Can I ask a question that's not about home buying real quick?
Whatever, go for it.
No, just so what was posted in the in Wealth Squad was about the ASO. What do you know about that? And if you don't really mess with options, it was in the option chat, but like, is that a good trade stock to get into, or where you at on that?
I haven't even looked at any of that, so I don't even know. What was it? What section was it posted in?
Options and ideas.
Oh, options. Yeah, I haven't.
It was from Taylor.
Oh, okay. Yeah, I haven't looked at it at all.
Okay. Yeah, I messaged him on Instagram. I don't really know how to message on in the Discord, but yeah.
So if you go to the Discord in the group, like let's say you go to options chat, and like the first person on there, if you click on their picture, it'll come up, and then you'll see there'll be like a message, call, video, and then you just click message, and then you just message them that way.
Yeah. Okay. I see. I appreciate that. Okay.
Yeah, no problem. All right, you guys. Any last questions?
Yeah. Off separate from real estate. what Chris is getting into with the cars, is that taught in the Wealth Squad anywhere?
No, it's just something that me and Chris talk about. His sister Ashley, she talks about it. She got her first car, got it rented. Chris is on the hunt for one. I'm on the hunt for one. So we just kind of talk about it more on our personal stuff. We haven't talked about it in the Wealth Squad.
Oh,
Hey,
okay, cool.
you guys can DM me about it too. I just got my first car. I had somebody else DM me. I was answering some questions for them. Don't hit me up on Instagram or on the Wealth Squad. My Instagram's in the game, not the sideline. But I got a lot of. I'm brand new, but I can answer some questions that kind of give you some knowledge, whatever I have to disclose to you. You know.
I'll hit you up, Chris. Appreciate it.
I had a quick question. I mean, not really a question. It's just more so, it seems like a lot of people have questions about trust, as I do. Do you think there's anyone in the Wealth Squad that knows more about that? Or maybe we can get like a little class like this on trust?
I'll reach out to members in the, I think we might have a few. I'll reach out and we'll try to get something together.
For sure. Thank you.
No problem. All right. Any last questions? All right. So this one, whew, man, you guys, we did this one 2 hours. You guys stuck this one out. We had a good amount in here and a few of you guys stuck around. But you know, like I always say, you know, there's a lot of good information, you know. Shout out to Chris Johnson, you know, for putting this together and, you know, giving me the opportunity to, you know, teach you guys what I know. You know, I don't know everything. I don't claim to know everything. I just know what I know. And I just keep going with this real estate stuff, you know, stock markets, constantly investing, doing, you know, the car rentals, looking into Airbnbs, you know, buying tax liens, tax deeds, you know, doing all this different stuff. You know, it's pretty fun, man. It's, you know, you get to challenge yourself and you really get to see what you're made of. But, you know, it's cool because, you know, sometimes we'll spend 10, 15 hours just, you know, working and doing, but it's cool because we get to do it for ourselves. You know, that's kind of, you know, what we always push. We don't
stop coming in here.
We don't
It's 10 o'clock at night and you make a habit of keep coming in here.
Oh, somebody's in trouble.
Every night.
But let me mute that person. So but yeah, so I lost my train of thought. Hopefully somebody ain't getting whooped over there. But yeah, you guys just keep going. You guys gotta just, you know, try stuff. Like, you know, I just told you guys I just put 16K on the line. And I don't know what's gonna happen. I don't know how it's gonna work out. You know, I know I'm gonna have to put more money into it to rehab this property that I just got. But, you know, that's part of the process. I'm either gonna be, you know, this is gonna be something that's gonna work out great for me, or it's just gonna be a lesson. And I'm gonna know, okay, next time when I get a property, I need to do this before, you know, I just go ahead and buy it, right? I already know that I should have went and looked at it physically, but I wouldn't have been able to go inside anyways. I still would have just been able to look at the outside. I seen pictures from the outside, but that's just part of the process. So, you know, whatever it is that you guys want to do, you guys just got to get out here and get to it. Figure out what you want to do, right? It doesn't have to be real estate. It doesn't have to be the stock market. You don't have to create a business, but you have to do something. So I always like to ask people, what do you want to do, right? What do you like to do? What do you enjoy doing? And then if you're not doing what you enjoy doing, if you're not getting paid for it, start to figure out how you get paid for it, right? Life is not all about money. Life is about enjoying the things that you enjoy. So why not figure out something that you enjoy doing? Why not figure out how to, you know, get paid for it? That's the cool thing about the internet, is that there's going to be somebody out there that's interested in what you're interested in, right? You might be good at drawing. You might be good at playing the guitar or the piano. You might be good at doing hair, makeup. You might know all the best colognes for different skin tones. You might, you know what I mean? You might be a good person at, you know, creating clothing, or you might be a good stylist, or I don't know, there's you might be good at fixing computers or plumbing or real estate, or, you know, whatever it is. You got to get out here, put yourself out there. And I'm telling you guys can get paid, you know, from doing the things you love. That way you can, you know, make money and spend time doing the things that you really enjoy. Spend time with the people that you enjoy spending it with. You know, life is too short. People are falling out left and right. You know, shit is really getting crazy in the world. You know, we don't know where things are going. So, you know, you know, focus on you, cut out that negativity. You know what I mean? Get after the things you love, do the things you want. Everybody deserves to do the things they want to do. And, you know, but it's like, it's unfortunately not all of us are born into those situations where we have the family that has the money to give us that luxury, right? Some of us have to get it out the mud. You know, some of us come from family with money and that's cool. Some of us don't, but it's like, you can't worry about any of that stuff, right? You got to do what's best for you. You got to set yourself up. You got to get out here, grind. We have so many good opportunities. You know, I always talk about traveling. And I've been to some countries where, you know, the annual income is only like $1,500 a year. Like, imagine that. Imagine working every day, all day, and you only make $1,500 a year and you bust your ass every day. So that's what some people are really dealing with. So, you know, you got to have a good perspective at things. You know, if you got a roof over your head, if you got a bed to lay in at night, if you got clean water to drink, you know what I mean? You're already ahead of so many people out there in the world. So we got a lot to be grateful for. Not on here trying to preach to you guys. I just want everyone to live the life that they want to live, right? Whether it be in real estate, stock market, whatever you guys want to do, just get out there and do what you want to do. And when you guys stick with it, good things will come, right? I'm gonna stick with this option stuff. I'm gonna stick with this real estate stuff. I'm gonna stick with, you know, all the things I'm constantly doing, going to the gym, reading, all these good things. You know, you just stick with it. If you stick with something long enough, good things will come from it. So that's my little message for you guys for the day. As always, I appreciate every one of you guys for taking your time out of your day to join this class. I appreciate you guys that had questions, you know, the interactions. Someone had information for somebody else, you know what I mean? So I appreciate all that stuff. And, you know, it's, what are we on today? What are we, Wednesday, hump day. So, you know, we're almost through this week. I hope you guys finish out this week strong. And I hope you guys have a blessed rest of your night. Tapping out.
Appreciate you, Ace.
Sure.
Thank you.
Yep.
Thanks again.
No problem.